Hello everyone, Corey Mitchell with your swing trading stock market outlook for the week of June 17th. Each week I go through the same process, just looking at how aggressively I want to be deploying capital on swing trades, long, short, and to go through a few things to determine that: market health indicators, how the indices are performing, recent watch list trade performance, and looking at the sectors. If you're ever wondering where this article is, because it is updated each week, you can go to tradethatswing.com, go to stocks and stock market analysis and trades, and you'll see it updated there each week. So heading into the week of June 17th, market conditions are mediocre or mixed. We'll get into why that is, and that means I'm not taking long or short swing trades. I'd like to see either stronger upside movement or stronger downside movement before. I'm more of a trader that likes to trade in, let's call it, easy money conditions. When just most stocks are running higher, that's when I find it easiest to trade. Or if most stocks are running to the downside, same thing. If it's kind of choppier, we're getting these mixed signals, and that's why I do this thing for myself. This update each week is just to look at how easy does it seem out there to make money, and then if it seems a little tougher or things are choppy, then I stay out. You can check out some of these lists for potential stock trades. Let's look at how the indices are doing. So we have quite a discrepancy, which we talked about last week as well. NASDAQ running higher, S&P running higher. NYSE Composite, which is a broader measure of stocks because it includes all the stocks from the NYSE, which is stocks of different sizes, different industries. It's not doing as well recently. Like, we've pretty much had these kind of vertical moves in the last few weeks or last couple weeks, and the NYSE Composite is actually moving down a little bit over that same time frame. Same with the Russell 2000. I don't put as much emphasis on the Russell 2000, but it is still, a big chunk of stocks. And it kind of looks at the Russell 2000 is, if you take the largest 3,000 stocks, the Russell 2000 is the smallest 2,000 of those 3,000. So it does hit, a pretty big segment of the market. The S&P 500, looking at the 500 biggest companies. So, the Russell's kind of looking at, the smaller companies. So these big companies, these are smaller companies, this is a wide range of companies. So this kind of shows us what a lot of stocks are doing. And when we look at these, it looks a lot choppier than if you just look at the S&P 500. And if you've noticed that in your trading, if you're trading a big, really large cap stock, then you might not notice it. But if you have multiple positions in some different stocks, you might be noticing some choppiness. This could be why. This is the Canadian index, and it is falling off. Commodity, a little more commodity based, and it's also moving lower over the last week. So not really confirming these other ones. Let's briefly look at Bitcoin. Last week we had looked at this rounded bottom pattern. We had this little squeeze going on here. Tried to pop up. Hasn't gone yet. But we do still have that overall rounded bottom pattern. This, what we call the handle, just taking a bit of a different shape. And so we'll see. I still like the overall uptrend of Bitcoin. But at some point, we've been chopping around for quite a while. This has to start moving up. And if not, get out. The VanEck Gold Miners Index, man, I just don't like these charts right now. We had these big breakouts on the long-term charts for gold, so that signals the potential for a long-term uptrend in gold. But at least right now, it's pretty messy. We'd have this range going on here. If we start to move up, maybe it moves back up toward the top of this range and could eventually break out. So there, some possible ways to trade this, but it's just been really choppy, really messy. Not my kind of ideal conditions. So, and same with the gold miners, just, yeah, really choppy and, yeah, not the greatest price action. So I'm just leaving that for now. Let's look at the market health indicators. So this is a S&P 500 chart. And below it, I just have a few things which help us see how things are going under the hood. And volume, not important to me at the moment. This is daily percentage movement. And what I'm really looking for here is just big drops, 2% down days or bigger. And as you can see, we have not had any for a long time as we've been in this overall uptrend. Even this, little choppy sideways period here where the price did decline, we didn't get the big drops, the big selling pressure coming in. So that indicated, this is a minor correction likely to move to the upside eventually, not turning into a big crash. And we saw the same thing here. Minor correction characterized by lower volatility is when you start to see those really big sell-off days that indicates we could be in for a bigger decline. And I just take a couple days off to see what happens. And if the price keeps going up, great. If it moves sideways, we haven't missed out on anything. If it moves down, we potentially saved ourselves from, buying into a big drop. This is the advanced decline line, the NYSE advanced decline line. Advancing stocks minus declining stocks is a cumulative number. Generally, we want to see this moving with the index or to help basically confirm the direction. We can see right now it is not doing that. We have a pretty strong move to new highs here in the S&P 500, and the NYSE advanced decline line is actually moving lower. So it has not moved above its high, which was back here when the S&P 500 has. So it just shows that a lot of stocks aren't quite moving up as well as the S&P 500 makes it look. This is up volume divided by total volume. Basically here we're just looking for extreme upside volume, buying volume or selling volume, and we haven't had any. We're looking for extreme values of 90% upside volume. That would mean 90% of the volume that occurred that day occurred in stocks moving higher, or 10% upside volume. Only 10% of the volume that occurred in a day occurred in stocks moving to the upside. So those would be extreme values, and we haven't had any in a while, so no signals there. And this is how many stocks are above their 50-day moving average. The red line is the S&P 500. Percentage of stocks above their 50-day moving average. Red is S&P 500. The turquoise is all U.S. stocks, and you can see about 40% of all stocks, 36% of all U.S. stocks are above their 50-day moving average. So that's not really bull market type behavior. And yes, even though the price is moving up, this is telling us, a lot of stocks are not participating in that. So less than half of stocks in short-term uptrends. So just something to be aware of. All these things just kind of say, hey, it's a little choppy out there. So even though the S&P 500 doesn't quite make it look that way, there's enough warning signs out there that I'm just going to stay out for now and see what happens. Sectors, pretty much technology across the board. As we can see, the NASDAQ really running up. Some of those stocks also help dragging up the S&P. And something to be aware of is just that the S&P, while we think of it as, the 500 largest companies, the same with the NASDAQ, 100 of the biggest companies, it's not equally weighted amongst those 500. About the top 5 holdings or so are about 25% of the entire index. So if only a few stocks that are heavily concentrated are doing well, that's going to drag up the whole index. Even if 400 stocks in the S&P 500 aren't really doing well, their weight's so small that it doesn't matter. If you have those 5 big companies doing well, then it's going to drag up the index. So you can look up, the stocks that are in the index, and if you happen to take a look at them, you'll see that they're all trading pretty close to their all-time highs. And so, yeah, if they're trading at their all-time highs, the S&P is pretty much trading at its all-time highs. Even if the other 450, 75, however many stocks aren't doing that great, that index is probably going to be moving up. So yeah, technology really strong, and communication services also, doing well. So what am I doing right now? Well, I still like Bitcoin big picture, but again, ultimately it has to move up. Otherwise, we'll move capital to something else. Luckily, there's not much to move it to at the moment. I like Bitcoin better than throwing it in stocks at the moment. As I mentioned, not really considering stocks until conditions improve, or maybe if they get worse, I'd consider taking some short trades. Gold and GDX, yeah, there's the potential for that long-term uptrend, but I want to, start seeing that upside movement first. Right now, it just seems so whipsawy and choppy. I'm just going to stay out. And then, of course, there's always the option to day trade and things like that, and there's some resources on that. So that's your swing trading stock market outlook for the week of June 17th. Have a great week out there.